Hello and welcome from the Financial Times here in New York. Today I'm joined by Alan Ruskin of Deutsche Bank to discuss some of the interesting developments that are occurring currently in the global currency market. Alan, thanks for joining us.
Oh, it's my pleasure.
Well, it's great to have you here, and in particular you've brought some very interesting slides along for us to take a look at. And so let's look at this first slide, which is sort of a broad matrix of the various countries and their fundamental underpinnings. What is this telling us?
Well, I like to look at countries in terms of their relative performance. This is their relative performance since the end of 2007. So really it encapsulates some of the crisis and then after the crisis. And what you really see is a sea of red when it comes to the UK. I've color-coded this.
Right.
So red is bad and green is good.
So sterling's really under the gun.
Sterling is under the gun on a host of different data metrics. So for example, growth, the weakest in G10.
Right.
Inflation, the highest. Odd combination, and how do we square that? In fact, we find productivity is the weakest. We also find the external accounts are deteriorating. Again, a little bit of a function of productivity. Export sector, okay, but not great in relation to imports. So on almost every metric, sterling looks weak, and it looks very weak in relation to the United States.
Right. Now, another currency that's also come under a lot of pressure this year so far has been the Japanese yen. How does that compare?
Well, Japanese yen has got weaknesses in certain pockets. So, for example, a lot of people think that it's all about the fact that the BOJ is going to expand policy aggressively, and the yen's weakness relates to that. In fact, what you find is that the export sector has been underperforming pretty much everybody since the end of 2007. And if you go back even further, the last 15 years, it's pretty much been underperforming then as well. So the current account's been poor, foreign direct investment outflows have been large, so the external balances do not look good.
Right. And now, sort of switching gears a little bit, let's come focus more on sort of north of the border from here, which is Canada. And I think we have another chart that shows the housing sectors for both the US and Canada. What does this tell us?
Yes, I think Canada actually ranks quite well when you look at that table superficially. But where are we going from here? And if you actually look at what's happened in the past, residential investment in Canada has been above average.
Right.
Interest rates in the Canadian economy have been very low for the Canadian economy. They've imported very easy monetary policy from the Federal Reserve. It's too easy monetary policy. The housing market's boomed, but now it's going to turn. And at the same time, you find the United States' residential investment as a share of GDP is very, very low. It's turning, and it's turning upwards.
Right.
So what you're going to find is the Canadian economy is going to be relatively weak, the US economy is going to be relatively strong, and that's shaping dollar Canada to push dollar Canada higher or the Canadian dollar weaker.
Right. So let's take sort of our final chart is one of the dollar over time. And I mean, is the dollar back?
I think it's back by default to some extent at the moment, right? So we're just ticking off these currencies. Well, sterling's not great. The yen isn't great either. Canada is starting to turn. The euro now with the Italian elections has got its own set of problems.
Right.
And I think we've just got the basis of a long-term turn. Keep in mind that some of these ups and down moves on the dollar, when you look at it in terms of big picture or multi-year, they're typically anywhere from about 6 to 10 years. But I think we've got the basis of a turn here that we reinforced when the Federal Reserve starts to withdraw from QE. I think that really gives us another real kick in terms of the dollar leg higher.
Right. And do you think that a strengthening dollar will help the Fed negotiate the withdrawal of QE?
No, I don't think it works too much the other way around, really. I think, if there was an inflation problem, then perhaps yes, but no, I don't think there's necessarily going to be an inflation problem at the point where they withdraw from QE.
Great, Alan. Well, thank you so much for joining us, and really interesting to hear your views here on currencies.
Thank you very much, then, Mike.